Welcome back to Asia Tonight. Here's a check on markets now. On a viral share dumping plagued stock markets in mainland China today as they return from an extended Chinese New Year break. As much as $420 billion wiped off from China's benchmark index due to fears of the impact of the novel coronavirus and what it could have on the economy. Now, hundreds of stocks maxing out the 10% limit in daily trade. Even the Chinese regulator imposed restricted share sell-offs today. Shanghai's Composite index saw a plunge of nearly 8% in trade. That is its worst day in more than 4 years. Now, meantime, the Shenzhen Composite also taking a beating, an even deeper dive seen there, while Hong Kong just managed to stay afloat in trade today, up some 0.17%. Now, oil and other commodities contracts all posted sharp drops today, catching up with what we've seen in sliding global prices. Now, China is the world's largest importer of oil products, of course, and according to Bloomberg, oil demand since the outbreak began has dropped by about 3 million barrels a day. That represents about 20% of total consumption. Global supply chains, especially for crude, will continue its rocky path to some balance in demand and supply to China. Now, China's oil giant Sinopec shares tanked dramatically. That was after saying that it's cutting back production this month. China Construction Bank, meantime, also feeling the pinch today, sinking down some 8%, nearly 8% at the close. Also worth noting was Queichao Mutai. That's the world's largest distiller. It's seen as a barometer of Chinese consumer goods. Just take a look at what happened to its share price, down some 4.64%. Shareholders there not too happy with that share price today, taking a massive hit. Meantime, travel, tourism and entertainment counters, they are down in the red today, with travel restrictions being seen in and out of China. Air China and regional airlines like China Southern losing altitude today. Take a look. You've got them at nearly 10% down in trade today. China Railway, that's a significant one to look at as well. Over 10% down, in fact, in trade today. And casino and hotel operator MGM China Holding also on a downward trend. At the other extreme, though, well, investors continue to pile on those healthcare stocks, the pharmaceuticals, amid the panic buying of face masks and other medical supplies so needed at this time. Shanghai-listed pharma companies all topping their daily gain limit today. Shanghai's #1 pharmacy and China Mexico both had to be suspended after surging past that 10% limit in trade today. Now, the yuan opened at its weakest level, meantime, for the year. It continues its slide past the symbolic 7 per dollar level.